I was contemplating selling right here um, because it was a strong enough sell-off that it was a pretty strong bear trend. So I thought we'd continue lower. My only concern with it was that it was still part of a bear channel. So I was selling pretty low in a bear channel, but I still thought it was strong enough that it wouldn't be able to reverse straight up. It'd have to go sideways or down. So I sold short at 289.99, just looking for 10 cents. And now we're reversing up pretty strongly, stronger than I had expected or hoped, and reversing a lot of this initial sell-off. So at this point, I'm thinking I should just move my target to break even and try to get out without a loss, because it's not really acting how I thought it would. And now we're 4 bars in, all bull bars closing on their highs so far. So I'm putting in a stop loss now, thinking that I'm going to get stopped out. I still think it was the right thing to do, because there's also an edge. There's not only an edge in entering the trade. I feel like there's also an edge in exiting the trade. So I think I did the right thing here. And now that it's done something that I didn't expect, now my odds have changed. So by recognizing that my odds are different and my premise is no longer valid, I think by exiting earlier than my stop loss, that is also a type of edge. That if I can manipulate my initial risk reward, so I'm okay with getting stopped out here, and I was okay with my 10-cent profit. But if I can notice something in between my stop loss and my target that would allow me to get out earlier, I think that is an edge as well. So that's what I'm trying to practice, is like seeing this reversal and thinking, okay, my premise is no longer valid, so let me try to get out with a smaller loss or break even and get out of the trade before allowing my stop loss to get hit. So I'm already expecting not to make money here, and now it's just about taking a smaller loss and not taking a full loss. And I think if you do that often enough, the exit of the trade also puts some odds in your favor, because instead of taking a full loss when you're wrong, you only take a half loss when you're wrong. So my stop loss, my target is now at break even, because I'm thinking we're doing something different now. This is a strong reversal up, so it's starting a new leg up potentially, and this could be the first leg up of two. So it could go up here and then down for a higher low, and then a new leg up. I'm thinking that we're going to get a higher low, which is why I think I shouldn't wait for my initial exit, which would have been down here, and I should look to exit somewhere higher than the prior low. So I do think my profit target will get hit, and I'll be able to get out break even, but I don't think it'll get all the way back down to a new low. And just for some context, something that's similar to that is, let me try to find it. Something like this, where we get a leg down and then a really strong move up, where the initial premise of looking for lower prices is invalidated, and now we're probably looking to go higher. So here's another example. You got 4 really strong bars up, and now you get a minor sell-off here, and then you get higher prices. So these 2 bear bars is not really a time to sell, but more of an opportunity to get a smaller loss. And so that's what I'm looking for here, is that I'm looking for the price to bounce from a higher low, but I'm hoping that it's going to have to get down to my initial entry first. Now at this point, it's starting to act more like this one. This one didn't really show signs of support. It just had 2 bear bars and then bounced strongly. But this one is giving some signs of support. It's not selling off strongly, it's having these tails at the bottom. So when I started to see these tails, and this last bar, most recent bar, create a tail on the bottom, I started to think that it might not get down to my initial entry, and decided to just look to get out with a 1-point loss, so a 10-cent loss. So here I just changed my target to 290 290.08, I think, or 290.09, and just look to get out with a 10-cent loss.